Good morning, traders. Welcome to the Flow Show. Here we are. What day is it? I don't even know. Thursday. That's the date. Thursday, 24th of April. In this short week, 2 more days to go to the weekend. Morning, Kay. How are you hanging?
Morning, Ryan. Morning, everybody. I feel it's a tired Tuesday. I'm already naked. But yeah, we're warriors and we have to go back into the arena.
Yep, day after day. We will do that and continue to do so for the foreseeable future. Anyway, right. Well, let's get straight into all the news and headlines. China's still been doing the run around all the other countries. China's Xi, speaking to Xinhua, said China is willing to work with other countries to uphold international trade rules. Still not playing ball as far as what's going on with US tariffs. While the US may be making conciliatory noises, China is completely blanking that, saying there's been absolutely no contact between the two countries. There's no ongoing discussions at the moment. Over in Japan, apparently the US told them that they cannot receive special tariff treatment. That was in recent talks that went on a couple of weeks ago. So they're not getting any special favours from Mr. Trump. We did get a bit of data out of Japan overnight. PPI data, what's called Corporate Services Price Index over there, coming in. Beating expectations, 3.1%, but that was down on last month, although last month was revised up. But it's still healthy numbers either way you look at it. So nothing going on there. As you can see, there's been a bit of movement in the call it the asset allocations over there. Foreign bonds buying reversed last month's negative 511 billion to post a 224 billion gain. Foreign investment in Japanese stocks was also positive as well, 705 billion there. Coming over to the Bank of England, and Bailey taking a bit of a no shit Sherlock line of comments. Nothing much of note from him, but he said fragmenting the world economy will be bad for growth. I wonder where he got that idea from. Bit of data out of Germany this morning. We had the IFO numbers, and a bit better than expected, and in most cases better than last month. Headline business climate 86.9, beating expectations 2 pips higher. Current conditions also up, was expected to drop. General expectations, though, were down 3 pips, although it beat expectations of a steeper loss. So maintaining a bit of the positivity that we saw last month compared to the zoo numbers that we got the other day. ECB bods are out and about. ECB's Nagel says he cannot exclude a German recession this year. Says the euro area is in stagnation picture this year. And a couple of interesting comments by a couple of Euro people. He said it's not good to doubt the US dollar's position as a safe haven, and we should give back the US Treasury the safe haven status. That was followed up shortly after by French Finance Minister Lombard saying it's important the US dollar stays the leading anchor currency. Kate, apart from those two guys obviously being offside dollar longs, what's the importance about the US keeping its safe haven status in respect of the euro perhaps becoming such a thing?
Well, yeah, if there is such a thing. Well, it's a case of stability, size of market, ratings, and everything. It would be something that all of a sudden the just imagine the wildest thing that US debt would be downgraded, and that would throw a lot of portfolios, including from governments, supranationals and stuff, out of the window. And it's also we can't forget that a huge percentage of commodities and trade around the world is also expressed in dollars. It would, yeah, it would like would be like if a big ship loses its anchor, and I think it's more a worry about global markets, for global markets than really a case of, oh, don't buy my euro, for instance. Yeah, I think it's just a fear of where the market would go if that would be the case. We know that there's a lot of stuff going on, but for the time being, as when we see reserves, when we see um, investment books, portfolios, they're still a huge part of an FX reserves for instance. There's a still a very big part in US dollars, and losing that anchor, losing that stability part of the books would really create a very huge mess in markets. The problem is, of course, the other side. I mean, if the US messes it up themselves, there will be little choice. But we are just not there for the moment. Okay, I mean, we have seen the dollar weaken, but that is not abnormal in the big scheme of things. We printed a low of 102 in the euro dollar. We printed a high of above 115 in the euro dollar. So give and take 12, 13% moves. That comes on the back of a few years where you have not um, had this kind of volatility. If you go back historically, a 10% move, sorry, in markets is not of the size of being disruptive. Okay, um, you look at historic moves, they tend to be bigger than that. Yeah, I mean, we go back to exactly there. That well, the global financial crisis is of course one thing, but even in other years where there is less going on, we still have these kind of moves. So you look at it historically, we are not de-anchored yet, but I think a lot of those people now, they would like it not to become the anchor, because it would really throw around well, the global order,
Yeah.
basically.
I mean, that's the thing. I mean, obviously, not going to take any conclusions from two people's comments, but just from those, it sounds like they are reluctant for the euro to take on a responsibility of a safe haven currency because of everything it will bring. Every time there's strife, everyone runs into the euro. They're always talking about the euro, ECB bonds, particular, and its effect on the economy, on inflation and whatnot. So yeah, do they not want that responsibility to then have to deal with everything that comes with it?
Yeah, but it's also a case of um, Europe, although there's one currency, you still have various um, internal or country per country regulations, and economic developments, and there's still some freedom. It's not like, yes, you have it in some instances, and in the States as well, but the dollar is more seen as like being one block than Europe in itself.
Yeah,
Historically speaking, I mean, the euro is still only 25 years old, right? And there's been political uncertainties within, because you have like really different countries. There is no such thing as a president of Europe, or the king of Europe. And that also brings with it potential uncertainties, surrounding what do we do, or which country. We have those fiscal rules, but they're getting bent, and that perhaps is pushing the officials in saying like, well, we're okay to be part of it. And there is no choice, because it's the second block, and they wanted it after all. It's okay to have a part of it, but indeed, the the responsibility, or I mean, the euro, you should be starting to see a lot more trade as well, global trade, expressed in euro, because that is still not the case. Everything is in dollars, or locally in between country to country. You can have some differences. I mean, just take between Russia and China, they probably trade in yuan. But yeah, I mean, it brings a lot of complications for Europe to be or to become that global safe haven or global anchor right now. If they get all the countries on one line, yes. But as I said, therefore, you would need the same regulations, rules and regulations in every country in Europe, and that is still not the case, right? You
Yeah,
still have,
absolutely.
you can still trade French, German, Italian debt, for instance, apart besides whatever decision you make on owning euro as a currency. But if you look, there's on the debt side of things, they are still not unified, right?
Yeah,
And that is an issue to become a global the global reserve or safe haven or global anchor in the world.
yeah. If you're gonna buy Europe, you've got to put it somewhere within one country or another,
Mm.
outside of just holding the currency. Yeah, correct. Absolutely. Right, let's move on. ECB. Oh no, I've done Nagel. Who else is there? Not good old Notters. ECB's Not says not concerned about the prospect of a stronger euro and smaller current account surplus, which goes against what ECB Muller came out and said, saying the euro gain is going to hurt competitiveness and cool inflation. Says it's too soon to say whether June will be a cut or a pause. Rates may need to be cut below neutral on all this trade stuff. Villeroy says it's appropriate that the ECB is likely to cut further this year. ECB's Ren taking a little bit of a dovish tilt, although he balances that out. He says ECB shouldn't rule out larger interest rate cuts, but says there are a few good arguments to pause rate cuts. ECB's Lagarde was waffling yesterday, says seeing a tariff impact in the PMIs and hiring numbers. A bit more data from yesterday, and just something I'll keep half an eye on. It's the NBA stuff. The significant thing yesterday was that the refinance index, this is like remortgaging, had a bit of a big slump from 841.9 to 673.6. So that's potentially worrying. I mean, this is a weekly report, so you never take one number to heart, but that's a big drop in refinancing. So that's people looking for new mortgages, likely a lot to do with the effective 30-year mortgage rate jumping up to near 7% again. So that can have a stymieing effect on housing market, or the mortgage market, should we say. Purchases as well dipping back too. So it looks a big number, down 12.7%, but we had a plus 20% the other week. So it's getting a bit volatile, but no real clear trend at the moment. But keep an eye on this rate to see how purchases and refinancing goes, because it could cause a bit of a slowdown like we saw previously when the rate came up. People less likely to move home if they're going to be refinancing at a much higher rate, which can then seem halting the housing market. Not that we've seen any of that. New home sales beat expectations, coming in at 724,000, higher than the 684 expected, and the slightly lower revised 674,000. Prices, though, were down 7.5% from this time last year. So once again, we're not seeing hard data such as housing showing any big wobbles there, but this is March data. The mortgage data that I just highlighted is last week, so a bit more up to date. The Fed's Beige Book was out yesterday evening saying that economic activity is little changed since the last report, but the biggest take is that uncertainty or firms or the amount of people using the line that they're uncertain and there's uncertainty in trading was growing in that report. OPEC, we must be nearing an OPEC meeting. That's happening on May the 5th because all the sources pieces are dropping now. Apparently, according to Reuters sources, several OPEC Plus members want another accelerated oil output increase for June, and they want that decided at this May meeting. So that's going to keep oil prices from rallying too far. The White House was apparently looking to cut China tariffs down to some 50-60% of some of the numbers reported. That was by the Wall Street Journal yesterday, although Trump has not made a final decision. Not long after that, China Foreign Minister Yi said the US abuse of tariffs has lost popularity and the US has isolated itself from the international community. Treasury Secretary Bessent was speaking in Washington as well, so China will come to the realization it needs economic change. Says it's an opportunity for a big deal between the US and China. Also said we have to continue to have a strong dollar policy, and the strong dollar policy is about having policies in place to attract capital flows and confidence. Then later on, there was a piece in the Nikkei saying that he was not going to ask Japan to target a specific level in its currency, giving a bit of relief there to what those talks might contain. Trump was out and about saying EU and China are ripping the US off, but then said we're going to have a fair deal with China, saying that the timing of any tariff reduction depends on China. Says tariffs for China will be set over the next 2 to 3 weeks. He also laid into Zelensky again, saying he has no cards to play and he can have peace or continue fighting for another 3 years before losing the whole country. So he's losing patience with Zelensky in these negotiations. Apparently, he's going to exempt some car makers from US tariffs, but then speaking about Canada, said car tariffs could go up because we don't want cars from Canada, but we are working on a deal with Canada. Now, just to give you a bit of anecdotal evidence of what's going on with all this trade stuff, Hapag-Lloyd, one of the big shippers, talking about the conflict, said that registered cancellations of around 30% are being seen from China to US. So cancellations of shipping, booking space around 30% from China to US. But on the other side, they are simultaneously seeing massive growth from Vietnam, Thailand, and Cambodia. They say they haven't reduced the number of ships on US routes, but are using some smaller ships. Then another shipping source, should we call them, someone on Twitter that I posted in our chat room, said that ocean container bookings from China to the US are down over 60% industry-wide. That's after the flood of orders went rushing out the door, as we've seen from the trade data. So the potential for a big slowdown now is coming now that everyone's stocked up and front run and everything else. And the longer things go without a deal coming into place, then the more likely those stocks are going to get eaten through. And then we start to see shortages and price rises and everything else kicking off. So the clock is ticking on when we might see some of that filtering through. We're probably talking maybe a couple of months if things stand as they are for people to burn through stocks and whatnot. And then we see what happens after that. That's it. All I've got on the headlines. Kay, anything else?
No, I think you covered everything, Ryan.
Cool. Right.
We could go on for ages, but
I'll tell you what, it takes me longer and longer to put together the headline list these days.
Those comments from Bessent, who was trying to teach the IMF a lesson yesterday as well. He did say that a trade deal with China could take 2 or 3 years, right? And that spooked the market just a little when he came out with that line. But I think there's a lot going on, and as you rightfully said in the chat room, there's an overload of headlines, but there's actually not a huge deal of fresh news, right? New news.
Yeah, I think that the market's got a bit of headline fatigue today. looking at what's going on. Looking a bit listless at the moment. Right, Ali, you've already highlighted your problem with your cable. You don't put your orders on your levels. You put them above, below, wherever. If you have a level, you have to park in front of it in case they don't hit your level. And I think you've learned that lesson in cable this morning, unfortunately. But we always make those silly mistakes, and we're here to learn. So as long as you learn from it and move on from that, then that's all well and good. Right, who's looking at dollar CAD? Who's looking at dollar CAD as well? This one, I was talking to one of our roomies about this one this morning. There's a lesson to be learnt here. Okay, when you have big levels, whether they're yours, mine, whoever's levels, okay, and this 138, 60, 70 area, we've been banging on for ages because it was a level that we failed to break through, going all the way back to 2022. Okay, struggled to break through that level. We had odd fake outs, odd moves, but they never lasted until we finally got a proper break. Then we've been trading around it. Now, what happens with levels like this? You can use them as pivots, like this area. We couldn't hold below, then it's support, couldn't hold below. Then we get a break, it holds below, you get a runner, holds. But looking at all this, it's becoming a bit washed out. Okay, so this is a decent level, but it's becoming a bit washed out at the moment. And what you do with those types of levels is you can sort of ignore them for a bit, okay? Because there's no point trying to trade either side of it, you know, because if you're not getting the big moves away from it, then you're just going to find yourself flip-flopping around it, sort of like this. And then, you know, you end up doing a load of trades that lose money because you're getting stopped 10, 20 pips either side while it wiggles around. So what you have to do is you have to let the level wash out a bit, let it go, and then look to see if you then get a significant move away from it for a period of time. So, for example, let me get my little brush out if I can find it. So what you want to see is, you know, something like this, where it goes on a pretty far wander, doesn't matter where, can last for a couple of weeks to a few months, who knows. And then you look at it if it comes back again, okay? While it's doing that, you don't care about it, ignore it. Okay, you want to see a move away, and then you see if it comes into play again. And the same thing happens over data points. If you're trading against a big level and you're 10 minutes from the NFP or something, you ignore the level, because a big number, it's not going to give a monkeys about that line, that level on your chart. And then what you want to look for, obviously, is, you know, you get a move away or it goes through the level, and then 10 minutes later, it might come back. That's when you look at your level again. So there's always several scenarios you should have in your playbook as to how you deal with big levels, because like this, sometimes they nice and clear, like we've got here, 139.77. Sometimes they get a bit messy. Doesn't mean you strip it off your chart, just means you let it go for a little bit and come back some weeks down the line whenever you get a retest or something like that. But anyway, for now, get rid of all that. Dollar CAD's looking like it's a bit listless. As I said, a lot of pairs looking a bit listless today. We've got no real decider which way we want to go for this at the moment. So it's probably wiser just to set your boundaries a bit wider, maybe up towards 139, down to 138 and some of these lows down here, and let it mess around in the middle and see what happens at either of those edges before taking direction. Because in the middle here, it's no trade for me, based on my view anyway. Same can be said for euro dollar. I'm still not really interested in this one. We have had a little bit of resistance into 114. So if you want to ping around the big figures, it's looking like 113, 114 is playing ball. I'm still pretty much just going to sit on the wide 112, 115 and see what happens with that one. One I am looking at for, again, pattern recognition, level recognition. I'm looking at maybe having a little nibble long if we get a dip to 142. At the worst, the bottom of this zone, 141, 70, 75, because we have had this bounce not looking, it's looking a bit dead cattish. It's not a huge bounce given the trend that we've had all year. So we've had these moments where we've had these lows and bounced up. What I'm looking for is, as I say, the usual pattern that I like to point out, and you get it time and time again. Where am I going? So here you've had it where you come into a support level, break it, then you find it as support again, a bit further up. We've had all these little patterns here, low, broken, support again. It's happened here, low, break, support. So I'm looking at the potential for this happening around here, where we've had this low into support, broke it. I want to see if we get another hold here. If we get that hold here, then potentially we've got maybe something like that happening. Doesn't mean we're going all the way up to 147 or anything like that. It can be as simple as just a couple hundred pips, like in this move here. Okay, so, but I'm looking at that pattern now where we've had a break, and if we rehold this level, then maybe that's a bit of a springboard for a move higher. So I'm looking at maybe having a little feeler at this one if we get down there. If not, I'll let it go and see what it wants to do otherwise. Kay, you got any thoughts on, well, I'm sure you got thoughts on Dolly Yen at the moment.
I've got a lot of thoughts about a lot of things. No, yes, of course, these discussions surrounding yen levels and stuff, but Besant already told us yesterday he wouldn't press. I think it could mean that things in yen take a leaf out of the Swiss book, and we rebound a bit. It's of course still attached to risk as well. The equity markets are coming back down a little less to the bond market right now. But I don't disagree. I think if we get back down to 141 3/4 and it holds, it could be a pretty decent sign for a move, perhaps somewhere up close to that 144 or so. But yeah, I think right now it's perhaps not the best of times to expect fresh trends. So it's gonna be bounces and dips and drops and things like that is what I'm looking at. And as a matter of fact, I'm looking at that in quite a few currencies right now. You were talking about the cat. It's holding that big support zone for me, but it's not really breaking any higher either. I think therefore we need to get back above 139.40 or so. But yeah, in the yen it's pretty similar. I'm just looking at those yen crosses. They came back better bid. And I've been playing that Aussie yen for a little bit, which I'm actually out of it right now, just because the bounces don't really hold, and Aussie is still struggling with that big zone up there. But yeah, I think looking at yen crosses as well, there may be a bit of a catch up coming compared to what the Swissy has done, which weakened about 2%. So yeah, I'm rather on that side of the street than really selling rallies right now. But it's all short term. Longer term, I don't know for now. I don't.
Yeah, and just want to come back to Ali, who's saying doesn't understand about placing orders on big levels. Okay, let's say you want to trade, you want to short the 55 DMA. Okay, 148.19, call it 148.20. Okay, you don't stick your order at 148.19.5. Okay, because that's right on the level. The thing you've got to account for is that different platforms are going to have different moving averages because they might have just different pricing. Some might have traded different levels, but you're going to be out 5 to 10 pips between different brokers and whatever. So you never go on a level. If everyone's going to trade this level, you want to be in front of it. So you want to be trading maybe, 148.10 even. 148.05. That's where you want to be looking if you want to short against this 55 DMA. Okay, because if everyone's going to be parking their orders there, and as I say, and people have different levels, you may not get your feel right on a level. So don't ever go on a level. Stick it 5-10 pips below or above, depending which way you're trading, just in case the market comes close and then moves away. You know, you'd rather give up. I'd rather give up a couple of pips against my level to get in a trade that then works than miss a level by 2 pips and it would have been a good trade. You can't get them all right. Sometimes it won't even get to the order in front of a level. That's just shit happens. But you're just trying to give yourself the best chance to get a fill against a level that you want to trade. Oh, lost myself there. Right, okay, I'm going to punch it over to you, mate, as there's not an awful lot going on this morning. There you go.
We are starting to magnet here in this cable around 133. Yesterday I said close above below relatively important. Well, it can't for the time being make up its mind, and we regularly trade around 133 again in cable. I think there's a bit of support building here, 132, 45, 50. That may be interesting because holding all of this means that we obviously won't get bigger corrections. I think the gateway for bigger correction is in the low 132s. For as long as that holds, it's still looking overall pretty good for me. But we have a few speed bumps on the way up here. 133, 35, 40, 133, 60, 65. That needs to be overcome again before we can talk about getting back up in the 134s. But at least for the time being, it's trying to stabilize and a bit like a lot of currencies, I would say. Yes, we do have 80, 90, 100 pips move because that's the nature of today's markets. But it does look like we try to stabilize here in sterling, despite whatever Reeves or Bailey also may say. Looks as if the market is looking at sterling relatively positively on a whole. So I wouldn't. I may try once again to perhaps buy a dip or sell I mean sell euro sterling or so or even and I'm been watching this for a couple of days, this sterling yen. It's hesitant. It can't keep above 190. But the close above 190 would be relatively positive, I'd say. And this one is one that is on my radar right now. Yeah, and it's just banging its head against this trend line. Just went briefly above it and then came back down with dollar yen losing 100 pips as well. But this is what I'm keeping an eye on. A close above 190 could see a bit of a push here, perhaps. And then traditionally, yeah, Michael Weissman, the gold silver ratio. I'm not really trading the gold silver ratio, but I did say over several of our shows now that in times when the stress, there is less stress in the markets, or we get headlines that could be hinting at something more positive, silver is usually outperforming gold. So I still think it's a kind of linked to risk, linked to all of this trade. But the day that we get like, and of course the bigger key will be a deal between the US and China. But the day we get some real positives in global trade, especially, I think then we will see a big outperformance of silver compared to gold, because the reasons why the gold silver ratio has been ramping higher are various, but the main reason is that gold has been a hedge against everything bad happening, right? Tariffs slowed down, supply chain problems, war in Ukraine, problems in the Middle East, you name it, right? And especially Asia being on the surface of things and being not singled out really, but being really hit very hard by potential and tariffs is pushing them to buy more and more gold. Is it part of the get out of the dollar trade? Yes, but inversely as well, if we see all those risk factors being reduced, the gold silver ratio um, should de facto come down a little bit. Now, we are not out of the woods, far from, because we know the situation is very fluid. So even though I don't trade gold, the gold silver ratio as such, I myself am rather concentrated on silver right now, but has to be said that we had this bit of a shakeout in gold and on headlines as well. Besson trying to get China to the table, etc. So we had this breakdown, probably quite big speculative positions being reduced as well, but it is already bouncing back, this gold, okay? Yeah, I hear people talking about potential, perhaps head and shoulder building here, but we will see. I mean, therefore, we should be testing 33, 55, 60 and cap. It is possible in current scenario, unless the market turns around or we get headlines saying that, I mean, nothing is done and the situation is not improving, in which case I think we are going to go back higher. No reversal yet, okay? I think before we can even start to think about a reversal, yes, you could eventually potentially play out. I don't know if it's going to materialize, this head and shoulders on a break of 32.80 or 32.60 and then get back into the 31s. But people are talking about 31.50, 31.60. That is the break level. Yes, but then look at overall. I haven't really put a fibs on the overall move, but even going down to this zone here, I think it's going to spook the markets if we get back down below 31 and a half, and we could have a quick run down to 3,000, psychologically break it. But therefore, for this to happen, I think we should see material change. And material change, we could have it the day that, for instance, Xi picks up the phone to Trump, okay, and start to really negotiate things. Then we could have like a big shakeout of the gold trade, okay. In the meantime, these are setbacks. Still, we have seen them in the past, okay. No later than even early April, we have seen a 200 bucks decline. We have seen it in October 2024 as well. Those things we have seen them, okay. Of course, a reversal will always start like this, but this for me at least, we are not yet in a reversal scenario. The one that is interesting is silver. We're trying to get the sticking to this range, and it's not only just recently, right? We have been trading this zone just above 33 a fair number of times, but yesterday we had the break of the range. Is it the start of a new bigger leg higher? Remains to be seen. Again, we are going to need relatively positive news, but if we get this positive news, I think we are really going to outperform gold, and we are going to fly. Where can we go up to? I rarely stick numbers on things, but I think we could break 34 and a half, 35 and move up into the 36, 37 zone perhaps, or just higher. If the whole situation get resolved, I think this is going to go really higher, okay? And then we are not talking about $1 or $2, in my opinion. We are talking about a lot more. But the situation being fluid as it is, we have to trade it on a bit of a shorter leash and a shorter time frame. Still, in my opinion, break we have break we retested around 33 and a quarter here, and we are trying to hold it right now. This is a short-term positive development. If we get back down below 33.10, we are just going to mooch around in this range again for a while and then see what happens afterwards. This is how I look um, at the metals right now. If the fear is gone, gold goes down. Yeah, well, I mean, in theory, Brand, that is what should happen, because Well, at least in parts, right? Because if we accept, and I think it's globally been the case that gold is a hedge against bad stuff, you take away the bad news. We should continue lower, of course, but for as long as that doesn't happen, I think we need to be a bit careful with going short actually in gold. I'm not buying it right here and now, but I'm not shorting it yet. Yeah, oil tried, and then we stopped on the next hurdle here around 64.70, 64.80, and we are back down. Um, this could still look a bit failurey, in my opinion. Ryan spoke about the OPEC, as various countries ready to up their output. Kazakhstan is actually showing them a bit of a middle finger and saying that they will do whatever they want. Read increase their output also. Um, this is you can compare it to silver actually a little bit. If the world gets to be a better place, we are going to go higher. But for as long as there's enough uncertainty here and people lowering their prices, as we have seen, hiking their output, for as long as the take up is not overweighing this output, I would say that there's still a risk that we are going to revisit those lows. We are going to need to consolidate and hold above 63 and a quarter, 64 and a half for me, and then we could talk about a bigger spike. And as we can see, even from we started back in 2022, all the highs have been lower than the meaningful highs before. Okay, so this is still not really a very bullish picture for me. What else? Have you guys asked about something else? Ali, Euro Sterling, I think we are in a range. We're in a range. Yeah, we're in this range now, and I guess we are going to find resistance 86, 86, 86.20 again. But equally, the support here has been holding. Yesterday we had that quick blip lower, or overnight, I should say, and then we came back up to the middle of the range. I'm not going to get involved in too much right now. Here, I am looking to sell rips though. So in that thing, I'm relatively in agreement with you there. Aussie, oh yeah, the one thing we have to look at is that Aussie. It's a painful watch. It's a real painful watch. I mean, this whole zone here, 63.90, 64.40. Yeah, I mean, you can really trade it actively. It still looks, if you only look at this move, it still looks beat because we are not getting down to first retracement levels around in the low 63. Still looks beat, but it is one painful watch. So many rejections, and I'm on the 4 hour. If you go onto the onto a lower time frame, you will see even more of those rejections here. So many rejections, but the day that this breaks, it's gonna really go and fly. I think then we can need another like maybe 3, 4, 5% on top of it. But before it breaks, I mean, be very careful because this is shaping up again to be like a very big resistance area. Okay, I mean we've been resisting there since we broken below it basically. That's December. That is now quite a few months that every time we try above 64, it's not it's a no-go. So I'm really going to wait. I think it may actually at one stage break, but we need confirmation for it to really go. Okay, this is something that is really a very very tough nut to crack. The kiwi is actually a bit different. Okay, we've broken above this channel. It's actually a completely different picture. Although we also hit our head against this major resistance here earlier in the week around 60 to 40, 35, 40. But we are still holding above this little zone here. Okay, so this to me it's still looking a little more positive than the Aussie right now. But yeah, I mean, things can change. As we have been talking about it as well, Kiwi is a smaller market. So when you see equal buyers in Kiwi and in Aussie, Kiwi is probably going to go a bit faster. This is probably one of the reasons why we are here. But it does look, all things considered, a little more positive than the Aussie right now. Break back below 58.90.95. The picture may look different, obviously. All right, and that's it for me, unless unless. Okay, no, I think I've covered everything. Back over to you, Ryan.
Thank you very much, mate. Good stuff as always. Not much else to say about that. Just to remind you of our sale going on. Ali, that will probably benefit you if you want to see exactly how I decide to trade dollar yen. You'll see that first and foremost in our trade room, in our chat room. As you can see, everyone else is trading. We put it in now for information purposes, just so you can see and understand how and why we're entering, exiting, doing the trade in the first place. It's all about learning, not following, copying or signals or anything like that. So grab that discount today before it disappears. Other than that, have a great day, everybody, and we'll catch up with you tomorrow.